Without any doubt, Texas Roadhouse is one of the best performing stocks in my portfolio. And I got so many people asking for an update analysis. So here we are. It's no deny that this stock is insanely popular among dividend and growth investors. Year to date, we're looking at a 47% increase in stock price, which is completely insane, of course. But even with this massive increase, Texas Roadhouse is still paying a decent dividend, with a 1.4% dividend yield and a decent growth number. But more on that in a minute. Looking at the total return in the past 5 years, we see that Texas Roadhouse massively outperforms the S&P 500. So the questions for today is Texas Roadhouse still a buy at current prices? Well, let's find out by doing a full analysis. And let me tell you, the price target is going to surprise you. Looking at the most recent earnings, we see that Texas Roadhouse beat on both the EPS and revenue. And for the upcoming earnings analysis, expect another beat. Diving a bit more into detail, we see that revenue was reported at 1.34 billion, up 14.5% year over year. The good part here is that the 13-week period is increasing at a higher pace than the 26-week period. Income from operating is reported at 142.8 million, up nearly 50% year over year. Again, increasing at a higher pace versus the 26-week period. It's the same with the net income and EPS. Both are increasing 46%. To me, this looks really impressive. One of the easiest ways to increase revenue for Texas Roadhouse is to open new restaurants, of course. But you want the existing restaurants also to increase in revenue. In here we see that comparable sales increased 9.3%, which is an impressive number. The weekly sales and to-go sales are also increasing year over year. And the restaurant margin in dollars increased 32.7%. The restaurant margin in percentages increased to 18.2%, which is a big increase versus last year, when it was reported at 15.7%. In total, 6 company restaurant and 3 franchise restaurants were opened. For the full year of 2024, it is expected that comparable store sales will increase 8%, which is a decent number, but a little lower versus the current number. The other numbers look pretty good to me as well. Another very interesting thing is the fact that Texas Roadhouse, restaurants only, has 9.4% in comparable restaurant sales, where Bubba's 33 has 5.5%, and Texas Roadhouse franchise has 6.6%, and especially the latter has seen a decrease versus last year when it was at 10.8%. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Texas Roadhouse is a 11.73 billion market cap company. PE ratio is at 32, indicating they could be overvalued right now. But hold your horses. Later in this video I will show you my 3 price targets for TXRH stock, so make sure to watch until the end. Revenue is at 4.95 billion, and in this graph we see that revenue went up really steady and consistent. Of course there is the impact of the lockdown period, but other than that it looks really good. Margins are going up in the long run, which is something that I really like. Again, we see the impact during the lockdown periods. As of lately, margins are increasing at a rapid pace. EPS is looking really good. It is similar to the revenue and margins, which is nice. Analysis expect that EPS will increase at a high pace in the coming years. For the year of 2024, it is expected to see a nearly 40% increase in EPS. In 2025 and 2026, the growth numbers are much lower, but still at a decent level. For the revenue analysis, expect also pretty high numbers. Again, in 2024, it is expected to see the highest growth with 15%. After that, it slows down a little bit. Return on assets is sitting at 13.4%, which is a great number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 10.8%, which is a really great number. It is also higher versus the 5-year average, which is a good thing. Current ratio is at 0.52, which is a decent number. Nothing really special to mention here, to be honest. Right now, Texas Roadhouse has $807 million in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Texas Roadhouse has $197 million in total cash, so they can't pay down all of their debt. This is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt, of course, but also to buy back shares, pay dividends, and all other things. And here we see that free cash flow is going up in the long run. However, it is not really steady and consistent. We also see the impact during the lockdown periods, but in general, it is looking pretty decent. Shares outstanding are decreasing, which is something that I really like. As of lately, they kinda stopped buying back shares at a high pace, which is totally understandable with the share price increasing a lot. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 1.4%, which is a decent number. Annual payout is at $2.44, and payout ratio is around 42%. I prefer 50% or lower, so right now they have 58% left in cash to buy back shares, pay down debt, do acquisitions, and all other things. The 5-year growth rate is at 16%, which is a great number. On top of that, they increased the dividends for quite some years. However, in the lockdown period, they cut the dividend, hence why we only see one consecutive year of dividend increases. And here we see the dividends paid since 2014. You see that TXRH did increase the dividends at a high pace. As mentioned, during the lockdown period, they cut the dividend. Right after things cooled down, they increased it to historical levels. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that payout ratio is really steady and consistent around 50%. Except for the lockdown periods, of course. To me, this looks pretty decent. In this graph, we see the expected dividends in 2024, 2025, and 2026. Of course, is this an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a similar rate versus previous years. And overall, these dividends look really good to me. But how about the historical returns? I decided to compare TXRH stock with the overall market. In this case, the S&P 500. Next to that, I added Wingstop and Wendy's. On the 5-year chart, we see that TXRH massively outperforms the S&P 500. In total, TXRH returned 262%, including dividends. The S&P 500 is sitting at 110% return. Wingstop has the highest return here with a whopping 420%. On the 1-year chart, things look pretty interesting, with TXRH again beating the S&P 500 with 90% versus 36% return. But also, Wingstop is doing an amazing job again, with 130%. On the 6-month chart, it is again TXRH that is beating the S&P 500, and this time it managed to outperform Wingstop as well. Wendy's is doing a terrible job with yet another negative return. On the 1-month chart, it is finally Wendy's with the highest return, but TXRH is second with decent numbers, beating the S&P 500 once more. Bottom line, TXRH beats the S&P 500 easily in the long run and in the short run. So could this be the perfect time to buy TXRH stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I'm filling in 8, 10 and 12%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm putting in 7, 8 and 9%. For the free cash flow margin, I'm putting in slightly lower numbers. For the PE ratio, I'm putting in 20, 22 and 24%. For the price to free cash flow, I'm putting in the same numbers again. In my opinion, Texas Roadhouse has a unique concept in growing at a high pace while maintaining control of the situation. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, Texas Roadhouse stock is around $175. I hit analyze and we see a lot of red numbers. We have a low price target of $91 to $107. We have a mid price target of $132 to $151. And we have a high price target of $187 to $210. And to me, the mid to high price target is the most justified here, meaning the stock is kinda in the middle of this range. And if I need to be honest, I'm a bit more leaning to the high price target here. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on TXRH is that the stock has tanked a lot lately. They keep on performing very well and investors seem to like it. Most fundamentals look really good to me, especially the consistent performance is something that I really like. From a dividend point of view, things look pretty good. They pay a solid yield and keep on increasing the dividends at a high pace. From a value point of view, things start to look interesting as well. The company is catching up and the valuation seems to get better and better. For now, I will keep analyzing them from time to time and kinda wait for a small pullback. However, I do love this company and I can't wait to buy more shares anytime soon. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.